Hi and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture of my journey and development towards financial freedom, and will also cover my portfolios on a monthly basis with updates, and also some videos about investment products and some videos about improving your financial well-being. So remember, if you like the videos, smash the like button, subscribe to this channel so you can reach a wider audience. Now let's get into this latest video. So this week's video is about my self-invested personal pension during the month of August. Now it's not to boast or brag, there's a lot more people out there with larger and more valuable portfolios than me, but it's to give people an idea of what my portfolios hold, the aims of my portfolios and its development towards reaching its financial gains. For those of you new, the aim of my portfolio is to make a year-on-year return of 10%. For this year, we're looking for dividends of £3,000 and a year-end value of £90,000. So if we look at the following chart, we started the month at £90,075. We finished the month-end value of £93,228. Making a nice return for the month of £3,153. Now, for the end of July, we were showing a very nice profit of 23% year to date, and the end of August, much better returns than we have expected of 29%. So for the year to date, we've made a nice profit on a portfolio of £19,509. We do pay £100 a month into our portfolio, and we also pay into a workplace pension with our current employer. During the month, we've received tax relief from the government, and we've received some dividends of £7.20 from one of our providers, AJ Bell. For the year to date, we've received £2,269, so well on target to reach £3,000. Quite a poor month for dividends if we look at the following chart, but next month will be a much better bumper month. We will receive some dividends from Lloyds, NatWest, Barclays, Legal & General, HSBC, BP and Shell. So a much better month moving forwards, and all our dividends will be reinvested back in our portfolio. Our average yield of our shareholding is currently 2.69%, and we're being charged fees from our provider of £13.97 during the month. Now, if we look at the following chart, our portfolio is mainly UK based. Currently 84.8% is in the UK, 12.6% is in the USA, and 2.6% is in Asia. Predominantly 79% of our portfolio is in shares, of which 64% is in the FTSE 100 and 15% is in the FTSE 250. Makes up about £73,400 within our portfolio, and out of our 17 shares we own, 9 are in profit and 7 in loss. Looking at the following chart, as we can see, predominantly based within financial services. 46% is in that sector, 18% is in consumer defensive, 10% is in consumer cyclical, and roughly 7% is in utilities and 7% is in technology. And as we look at the following chart for the shareholdings, it will show why we're so predominantly based within the financial services. Now, I'm not going to run through all shares, but just a quick overview of our largest holdings. Our largest holding is Aviva. We own 3,993 shares, £16,000, 17% of our portfolio, and it's just declared very good results during the month, and it will pay an interim dividend of 7.53%, a yield of round about 5%. So if bought for a long-term hold, has been on a recent restructuring period lately, moving forwards has promised great dividend growth and also a great payback towards dividends. Our next largest shareholding is Lloyds Bank. We own 31,308 shares, £13,700, 14% of our portfolio. Great, again, it was done for a very long-term holding. Will get dividends moving forwards, but somewhat per month it's down 5%, but it's been bought for a long-term hold. Our next holding is Greggs, the bakers, 266 shares, £8,100, 9% of our portfolio, and up since we bought it 151%. Dividends are being reintroduced in the month. It will pay an interim dividend of 15 pence in a quarter later on in the year. Our next shareholding is Barclays, 2,797 shares, £5,200, 5% of our portfolio, and it will give a good dividend next month. Our next shareholding is JD, the retailer. We own 500 shares, £5,047, 5% of our portfolio, but our best performer by a mile, up 159% since we bought it. And then our next shareholding over 5% is Drax, the power plant. We own 1,156 shares, £4,800, and just above 5%. All the shares we hold of note: we hold Penn and the Water Company, we own AG Bar, we own Card Factory, we own HSBC, BP, Shell, Legal & General. And one share we have bought during the month, we bought another 28 shares in HSBC, £116. It was bought to increase our diversification away from the banking sector in the UK, and hopefully moving forwards, quarterly dividends will be reinstated. So quite a mixture of our shares, some doing very good. Our largest shareholder have somewhat recovered this month, but all the shares are being bought for long-term holds. So unless the fundamentals change between the next 3 to 5 years, I see no reason why them shares will be sold. We have not sold any shares in the past. They're all bought for a reason, some for growth and some for dividend, to hopefully reach our investment targets. Now, if we look at the following chart, it will give us a summary of the funds we hold. Now, at the moment, we own 6 funds, all in profit, none in loss. Makes up 21% of our portfolio, £19,766. Originally, we were so UK based, we were holding solely shares, individual companies. So the funds were bought, 1, to diversify, and 2, was to de-risk the portfolio because it was so UK based. If we look at the following chart, just a quick overview of the funds we hold, how they performed, and the reasons why we hold them. So our largest fund is a Legal & General Technology Fund, £4,800, 5% of our portfolio, a very nice return of 60% since we bought it. The FANGs and the tech stocks have done very well. May not do so great moving forward, but sentiment seems to be carrying on. But we can certainly not complain with a 60% return since we bought it. Our next holding is somewhat selective, Bally Gifford Positive Change, £4,064, 4.3% of our portfolio, a very nice return of 49%. Has very small shareholdings, but all quality long-term growth holdings. Okay. Our next fund is a US smaller companies, £3,584, 3.85% of our portfolio, a very nice return of 33% since we bought it. It was bought for some growth away from the large tech companies and the big companies in America, and hopefully sentiment will improve and will give us some much better returns than large cap stocks in America. Our next fund holding is a global growth fund, £3,480, nearly 4% of our portfolio, 16% profit. It was done to diversify. There will be some good countries, some poor companies, but hopefully across the board it will reach our aims and objectives to give us global growth. Our next company is Lindsell Train UK Equity, quite selective, UK based, £2,700, nearly 43% of our portfolio, and a small profit of 8%, but it was bought because it got an excellent track record, has done for the last 10 to 15 years. Some good quality companies, Again, it was bought solely on its track record. We can just leave it there, and we know because of the companies it holds, all good quality companies, it will just be a steady performer moving forwards. And then our smallest holding is a UK smaller companies. We own £1,138, 1% of our portfolio, showing us a very nice profit of 40%. A recent purchase, but it was done on the back of the COVID recovery. Hopefully UK smaller companies will give some great returns than the large cap funds, but it was done for a reason. On a personal level, I think there's more scope for greater growth within UK smaller companies than there will be in the large UK cap companies. So a quite diversified portfolio. Now, we don't intend to increase our fund holdings, but what we do moving forwards, we may increase our existing holdings. And just like our shares, hopefully all good quality funds. We've got no aims of selling for the next 3 to 5 years, unless market sentiment changes or the management of those funds change. So a quick recap. Now for the month we made £3,153 profit, £19,000 for the year to date, and 29% return, so well above our expectations of 10%. Remember, these are my opinions, they're not recommendations, it's more of my journey of what the fund will do moving forwards and the reasons why I hold these shares and their investment funds. Remember, if you like the videos, smash the like button so we can grow this channel and reach a wider audience, and we'll see you in the next video.